Now let's put the spotlight on the FMCG space, because consumption is one such theme wherein in the domestic place that is moving up strongly. There are a lot of triggers, or rather legs to the rally, is what these analysts are highlighting, be it on the anticipation of a good monsoon, the rural recovery boding well. And today, of course, we have the note coming in from UBS where they're highlighting that consumer sector is a Goldilocks in the making. Whether or not that case stands true, let's take this discussion forward with Mr. Sunil Duggar, former CEO at Dabur, and Amnish Agrawal, Head of Research at Prabhudas Leeladhar, joining us on the show right now. A very good morning, gentlemen, and thank you so much for your time. Sunil, let me come to you to have your take. What's been really happening within the consumption basket? Because of late, from February onwards, we have been talking about that push for the consumption basket coming in on the back of the tax cut. But there's a lot of uncertainty regarding the tariffs as well. Back home, how do you see the consumption story moving up ahead in India, and which segments can do the best?
Let's stick to the staple space. The discretionary segment behaves very differently, and I won't get into that. And staples, it's a very polarized situation. Rural continues to par ahead, and I'm seeing the traction actually improve, especially if a good monsoon happens. Urban continues to lag, and there are issues with regard to the disposable incomes in urban households. So I think most companies have put their numbers into place for next year, the budgets, and I suspect they would be looking at double-digit growth in terms of volumes, powered by rural.
Right. Very good morning to you, Mr. Duggal, as well as Amnish. Amnish, let me come to you and get your view. Actually, when you talk about the entire consumption space, a lot of positive triggers now actually coming together for the entire consumption space. So no doubt we have the big bonanza in the tax, the fact that now we are in an interest rate cut cycle regime, hopefully that if that's how it pans out. So what do you think would be the key catalyst that one should watch out for in FY26 when they are looking at the entire consumption pack?
Yeah, hi. So you see, as far as your consumption pack is concerned, from the last, I think at least 2 to 3 quarters, so we are already witnessing that demand for staples is improving more so in the rural India. So rural growths are ahead of the urban. But having said that, one needs to go slightly deeper into what is happening on the urban side, because the sudden spike in inflation hit everyone towards the second half of September, partly because of prolonged monsoons, partly because of sharp uptick in inflation, duty on edible oil. So there were, I would say, multiple factors which contributed to a sharp spike in inflation, and consequently the demand over the last few months have been very tepid. That is one part of the story. The other part of the story is that today the scenario is becoming hyper competitive. Say, because of quick commerce, because of multiple avenues of distribution, today there are n number of brands which are available off the shelf. And so that is why if I go by, say, some of the, you can say, market research data, or if I go by just the growth rate of listed companies, so that might not be the true representative of what is happening on the ground. But nonetheless, if you look at, say, past few months, I think the scenario is looking better, more so on the rural side. On the urban side, because of the tax cuts, because of inflation cooling down, now there is hope that the demand will stabilize, and maybe by the time you can say June, July, the demand there should also start improving. So from that angle, I think things are looking better in FY26 than what we have seen in the past 3 quarters in particular.
But Amnish, if you were to pick up a category and, let's specifically talk about food, because that's where you have everything from price consciousness on one hand to premiumization on the other. Who do you think is winning the battle here?
Yeah, is it for me?
Yes, Amnish, for you.
Okay. You see, food is a very, very, I would say, here the hyper-local players, you see, they play a big role, and one has to look, say, from category to category. For example, you look at, say, something like your biscuits, where Britannia operates, always hyper-competitive. You had always local bakeries, regional players. Okay, so in this kind of a category, yes, new players have come in. Yeah, but if I go today to quick commerce, Do I see another 10 to 15 brands? The answer is no. Say, for example, another large category, you look at, say, instant noodles. Today, if I go there, you are about all types of variants. So I think foods is becoming now, one needs to dissect it into much more number of, I would say, segments first. And then it also depends upon that the fastest growing distribution channel in the country, quick commerce, how much is the disruption over there? Because there are a few categories in particular. For example, if you look at, say, your breads, you look at instant noodles, you look at, say, other grocery items. Today, the fragmentation and the competition there is rising at a pace which we have not seen in the past. But nonetheless, food as such has got a big scope of growth in India. But having said that, this growth now needs to be, I think, much more, it will be much more fragmented. And the growth rates will also depend upon the category, the salience, and the particular actions which will be taken by respective companies.
All right, but Sunil, the competition is just increasing, is what Amnish has been highlighting. And since you just told us that you are anticipating a double-digit volume growth, but help us understand what's your prediction when it comes to the pricing? Because of late, because of the competition, because of the high input prices, the pricing power was not there with the companies. But as we are seeing the macro data, the food inflation specifically has cooled down significantly. Do you believe that going ahead with this cool off and with the industry prospects now looking good, the pricing power is also expected to come back?
You've touched upon a very good point. And I think what is not a good sign is the margin outlook for staple companies, especially food companies. The input costs increase continue unabated. The key raw materials like palm oil are up 40%, wheat is up, tea and coffee prices were sharply up. So while we can look at, if we are being a little optimistic, at a double-digit volume growth, the margin outlook is far cloudier. And I think companies are still struggling to see how pricing can mitigate the sharp increase in input costs. If they may succeed or they may not. But I would think that the margin growth or margin expansion in the current fiscal for staple companies, particularly food companies, is going to definitely lag the top line. And this may continue till the inflationary fires are cooling off. This would transcend rural and urban. So definitely there is a lot of concern amongst consumer companies about how the margins are going to pan out.
Right. Mr. Dugar, I wanted to get your view also the fact that you have a lot of competition has been there. But what do you think will set these companies aside, given the fact that the competition is ever rising and there are so many sub-segments now when you talk about the consumption space that one actually has to watch out for, be it foods or be it retail. What's your sense? What will set these companies aside? Because you have to be constantly innovating. You have to make sure that you are able to disrupt that market.
Well, you have to continue to innovate. And in the urban space, you have to ride the new distribution platforms like quick commerce, etc. We shouldn't see quick commerce as a threat, the staples companies, but as an opportunity. Having said that, the companies who are able to master the intricacies of the supply chain of the QCom companies will be winners. At the end of the day, these companies are going to sell the same product. So I don't see them as a threat so much. I see them as a platform which offers opportunities, and the threat can happen if we are unable to master the intricacies of these platforms. So in the rural areas, you have, as Amnish was saying, a lot of regional and small players coming in. I suspect as the input costs rise, they may sort of taper off a little bit, because they typically thrive in areas where in situations where the input costs are low, so they can be very aggressive in pricing, push their low unit price packs aggressively, etc., and then they tend to fade away when inflation is high. So I don't see any tectonic shifts in the competitive situation in rural areas. In urban, of course, with the new D2C players and such, the picture is a little bit more clouded. But again, these players are small. We still have the established big ticket FMCG companies ruling the situation in urban areas, but they will have to again master the intricacies, as I mentioned, of the new distribution platforms.
Amnish, also help us understand that since there are a lot of discussing points that we have already touched upon when it comes to the volume growth, the pricing, the competition, which companies do you believe will be able to mitigate that risk? And like you are also hoping for a good second half versus the first half of this fiscal, which companies can actually do better? Amnish, this question is for you.
Okay. You see, there are, as Mr. Duggal also said, that the raw material scenario is it is very cloudy. Now, I would go a step further that this raw material scenario, if you look at over the past few years, it has changed dramatically. And one big factor there is the impact of global warming. Because we are having sudden heat waves, sometimes very heavy rains, droughts. So that is resulting into a lot of volatility in the agricultural production. And it is not only in India, but globally. For example, last year, due to that, we had got not very favorable crops in, say, your coffee, cocoa, or even the leaf tobacco. So my sense is that the companies and this volatility is not going to be over. It is going to be stay and it is like a new normal. Now, in this kind of a backdrop, there are, if I look at, say, the inflationary scenario, then the companies which had suffered last year because of the high inflation in raw materials, may it be Britannia, which suffered in case of, say, wheat, which suffered for palm oil, or company like, say, an ITC, which suffered in the cigarette business because of, you can say, sharp increase in the leaf tobacco prices. I think now with the, you can say, some sanity coming in the pricing and all your high raw material base already there in your margins and the reported numbers. I think these are, you can say, some of the companies where you could see maybe towards the second half of the year, maybe one quarter down the line, some sort of a stability and improvement coming in. But in a lot of commodities where you see, we need also to look at that over the past 5 to 7 years, the companies have increased their margins. Practically every company today is sitting at 5 to 6% higher margins than they were, say, around when your GST was implemented, maybe 2017-18. So today, for majority of companies to expand margins from the current levels is not possible. So you will get alpha only in companies where the margins last year have come under some sort of a pressure due to high, you can say, inflation in the raw materials. I think Britannia, ITC, maybe at some point of time liver, but the alpha there might not be that much.
Right. Amnish, I just wanted to take the liberty to actually ask you about the QSR space at this point in time. How is this one looking to you? Do you think that now a lot of interest will come back in the QSR space? It was long forgotten after the rise of the quick commerce segment.
You see, QSR space, actually, you see, these are all, if you look at the small ticket items. And because of the increase in the disposable income which is expected, the QSR space actually should be a beneficiary of that. That is one. The second is that most of these companies, they have not been doing well over the last I would say year and a half at least. And so now in the coming quarter, the base for many of these companies is now much favorable than what we have seen in the past. So many of these companies, I think today, if you look at, say, particularly FY25 EPS for many of these companies, it might be anywhere between 50 to 90% lower than the peak which they made 2 years back. From these levels, in terms of numbers, I think recovery is visible and you will see very high numbers in terms of profit growth. And I think by the time we reach FY26-27, they should be back in terms of profitability where they were, some of them, they were in FY23-24. So to that extent, there could be some excitement in this stock, but are these stocks very cheap in terms of absolute valuations? So I think they are not cheap, but definitely there is a growth revival. And usually when the growth revival happens, there is some excitement around the stocks and there is some returns which are yet to be made.
All right, but Mr. Dukal, a lot of these companies within staples also have exposure to the overseas markets, and off late what we are seeing is the whole Trump tariff discussion taking over, and how could it impact the various geographies and countries. Help us understand that how do you see this scenario shaping up for the consumption and especially the staple basket, because off late we have seen the companies talking about it, but do you believe that there's a case for Indian companies to worry?
some companies should definitely worry. They are, let's say, the rice exporters who get typically 30, 40, 50% of the revenues from the US. And now they obviously are going to be impacted. Now, if the tariff is 10% or thereabouts, I don't think, comparatively speaking, they would be impacted to any great extent. But they would have some reason to worry about the tariff outlook going forward, which nobody, of course, knows. But most other companies have very small businesses in the US. And typically, these businesses are sent through wholesale routes, gray channels, et cetera. So the impact may be fairly marginal. I don't think it'll be very big. Exposure is low, but for the commodity exporters, certainly they will be having some sleepless nights about how the tariffs will unfold.
All right, but Avnish, what is your understanding that, like Mr. Duggal was highlighting, that some companies should definitely be a little concerned, and he highlighted rice as a segment, but what's your sense? And if you can talk companies' name with us, that which companies should be a little, should worry a little at this point in time?
See, there are several companies, say for example, whether it is Marico, Dabur, GCPL, which have got a fairly decent proportion of their sales, which comes from the overseas territories. But for a lot of these companies, it is not only, I would say, one territory or US actually which matters, but and their sales are spread across, say, Middle East. Some companies strong in, say, maybe Indonesia. Marico has a big exposure in Bangladesh. Dabur, I think it is, I think, present big time in the Middle East, even US it is there, Turkey it is there. So I think what my view is that today we are in a state of very big geopolitical uncertainty, due to which there is very wide fluctuations in the demands, in the currencies, and I think all sorts of things are happening. So in this kind of a scenario, we are in a better position to take a call on the domestic business, because in many of these cases, what happens between, you can say, what happens between the trade between that particular country or something, you can say whether it is US or wherever they are selling, what happens to their currency, their demand. I think a lot of things will get settled over the next 6 months or so. But in the near term, we might see a lot of volatility coming in the international business for many of these companies, and that is what my apprehension is.
All right, then we leave it there. Thank you so much, Avnish, as well as Mr. Duggal, for joining us on ET Now to talk especially about the consumption pack and the themes and the key drivers that one should watch out for when you talk about this particular segment. But let's move on and let's talk about what exactly is happening in the markets at this point in time, where